I'm Ashton Addison from the Crypto Coin Show, and today on Blockchain Interviews we have Salman Khan, the CFO of Marathon Digital Holdings. Salman, welcome to the show, and thank you for taking the time.
Thank you, Ashton. Great to be here.
Likewise, a lot of exciting topics to dive into with regards to Bitcoin, Bitcoin mining, the ETF. The market has been hot with Bitcoin this week in the near end of October here, and hopefully that trend is continuing. I'm excited to dive into a little bit on what you and the team at Marathon Digital Holdings are working on. I know you have a lot up your sleeve, but I'd love to start off our conversation with a little bit on yourself personally, your background and how you got involved in all of this.
Yeah, great to be here, Ashton. And this is a great day because the price has been doing very well today, as both of us know. Look, it's been my background and experiences in traditional energy and renewable energy, if you like. And in my prior life, I've done M&A, mergers and acquisitions, and run financial operations, and also established renewable energy businesses, which means solar, wind, geothermal, and some of the other technologies out there. And certainly all that experiences, all of those experiences coming together from commodity exposed industries like oil and renewable energy and technology, all those things coming together certainly makes me very excited about Bitcoin mining space, because this reminds me of all those industries coming together: technology, entrepreneurship spirit, and also the commodity risk in the industry, in the sense that we are price takers, we're not price makers, and also we need to be efficient operationally and invest in operations that focus on renewable energy and also create value for our stockholders.
I love that you're also focused on the renewable side of it. I think a lot of people, they have misunderstandings around Bitcoin right now on just how renewable it is. I would love to dive into that a little bit later on. And I feel like overall, people, they see the price of Bitcoin. That's the first thing they know. And they know a little bit about that it's a digital currency, but the mining side, unless you're specifically interested in it, it can be a whole nother world. I'd love for you to explain a little bit more about the scope and the size of Marathon's operations, a little bit more exactly on what you guys are doing.
Yeah, look, in Bitcoin mining, as you know, you can produce Bitcoin anywhere in the world and wherever it's legal. And it's the bottom line is that you need to be more efficient. The more efficient machines that you have, the more operating cost that you have, the more value that you can create for the company. From an industry perspective, what matters is that you have the most efficient machines, and also you operate in a low cost environment. So the lowest cost producer, or the lowest tier cost producer, would be the winner in this space. And what Marathon has been doing is been reducing its debt. We reduced our debt by 56% or so, and we are preparing for the halving. We also are focused on machines being very efficient. We are one of the most efficient machines in the industry, and we continue to aspire to be the most efficient in the space in the near future. So that's all of that combined together, and operating cost synergies, where we can bring in renewable energy and other sources to reduce our costs, certainly helps us drive the value that you can extract out of the Bitcoin mining.
Yeah, it's a great point. And to do with the renewable energy as well, electricity costs can vary country by country, but if you can find some kind of ways to subsidize that, or use the renewable energy to lower those average costs, I feel like that can get the company a huge advantage.
Yeah, absolutely. So to give you some perspective, Marathon is a global miner. We operate not only in the United States, in multiple states, but also internationally. So in particular, we partnered with the Abu Dhabi government and the Sovereign Wealth Fund there to establish Bitcoin mining, one of the largest in the GCC countries, or in that region. And we energized that in a very difficult environment, 55 degrees C temperature and 100% humidity almost. And that is the most difficult operating condition in the world. And the technologies that we use and the way our operating structure is structured in a way that we can take we can solve the problem in a manner in a much more smaller scale to a larger scale and dispersed in different countries and around the world, which puts us in a unique position.
Mm-hmm. Yeah, it's very cool to be able to mine Bitcoin in some of the toughest conditions and still turn a profit. It is awesome, especially because Bitcoin's going up right now. And I want to talk a little bit about that side because I know that Marathon is one of the largest public companies holding the largest amount of Bitcoin as a public company in America. And there's obviously a huge treasury management sort of risks involved with that. When you mine, you get Bitcoin, but then when do you sell it or do you hold it in hopes it doubles, but also you have to pay operational costs? Can you talk a little bit about that mindset and the treasury management for Bitcoin?
Yeah, great question, Ashton. We've got almost a $500 million worth of Bitcoin and cash on the balance sheet, and our we're the largest hodler in the Bitcoin mining public company space, and we're proud of that, and we are long on the pricing, long-term pricing of Bitcoin. So that's a fact that we're proud of, and we continue to engage. We continue to invest in Bitcoin from an investment perspective, but also creating value by producing and selling Bitcoin along the way. So the process for us has been pretty streamlined. We meet once a month as management team. We look at how much Bitcoin do we need to sell to fund the operations. So we sell the Bitcoin up to the extent that we need to pay our bills, and the rest of it is all retained on our balance sheet. For growth capital, we usually go out and access equity markets because we, being a public company, we do have access to equity capital markets, and that's what we believe is the best use of our investment.
Mm-hmm. And I feel like a lot of institutions that they're not involved with mining directly, or they've been on the sidelines, but watching Bitcoin closely. This second half of this year with the ETF discussions, and now it seems like the percentage of a chance of the ETF approval is getting higher and higher. Sounds like it's right around the door, although it hasn't happened yet. It's getting a lot of traction, and that's also in turn raised the price of Bitcoin quite a bit throughout October here. What are your insights into what's happening in the market right now?
Yeah, it's a phenomenal situation to be in. Look, this industry, as it matures, the regulation matures, and the regulators understand the value that this industry can create and for its investors and participants. The rule making becomes much more mature, and that's what we're seeing with FASB's new rules coming in, and SEC's views on the Bitcoin mining, specifically Bitcoin, out of the cryptocurrencies. So certainly it's a big win for the Bitcoin space across the board. The ETFs, obviously, look, ETFs are not a new phenomena in other industries. They exist in gold, oil, and other commodities, and certainly it's a huge welcome news for this space, because as they become as they float these ETFs, there will likely be an uptick in demand. And as we know, the supply is limited. That's the difference between oil and gold, where you could go out and drill additional wells and prove more oil in different parts of the world. And in case of gold, the same thing. But in case of Bitcoin, we know it's mathematically restricted. And that puts us in a unique position that in the short run, we expect to see uptick because of the demand and supply. So certainly a welcome move. ETFs coming into play, the FASB rules, and the investor confidence going up. Certainly, it helps drive the value of the Bitcoin to the direction where it's expected to be.
Mm-hmm. It's very interesting. Also, with regards to these other different commodities that have ETFs, I know you mentioned gold there. I've seen quite a lot of discussion recently, even from those like Larry Fink and BlackRock and other public company heads talking about a flight to quality assets. And it seems like Bitcoin is at the top of that list, but we're also seeing increases in gold price and movement of wealth into different asset classes. What do you think? Where do you think Bitcoin sort of ranks in this flight to quality? And do you think people are starting to shift that perspective that, hey, Bitcoin is actually intrinsically worth a lot more than I thought it was before?
Yeah, look, it's an investment allocation question. If I am an investor, and again, this is not an investment advice. Everyone should look into their own circumstances to invest and talk to their advisors to invest based on their own circumstances. But if I am investing my own money, I would look at different categories. So you've got equities, you've got gold, you've got bonds, you've got now this is a newer category that is coming in, which is very interesting. And given the limited production and limited supply of Bitcoin, and the value proposition is pretty huge here. And allocating, if investment advisors start allocating a small portion of portfolios into Bitcoin, other than bonds and gold and equities of the world, then you will start to see that huge uptick in demand in this space, right? And as we know, with the limited supply, that can drive the price pretty significantly.
Mm-hmm.
I think the key here, sorry, Ashton, the key here is that this is another asset category, and that's how the markets will view it.
Mm-hmm. No, and I was just going to say that relatively, people have seen that Bitcoin has risen a lot in the previous years, being, in the hundreds to low thousands, now sitting around 34,000 American. However, when you look at the market cap of Bitcoin currently, even all of crypto altogether, you're looking at, a $1 trillion market cap, comparing that to something like gold at 7-8 trillion, and the stock market at, much significantly more. I feel like there's potentially a lot of growth still to happen to equate to some of these other commodities.
Yeah, absolutely. Long term, look, this is at its infancy stage. As I would, if you have to think about it, this is the internet in the 90s, where Facebook didn't exist, Meta didn't exist, Google didn't even exist at that time, and nobody knew what was going on. E-commerce and rules were not defined. But as the space matured and newer technologies came in, the trillions of dollars worth of business has been established on the internet. And as this industry moves forward and matures from all aspects, you will see more technological advancements. You will see more use cases. You will see a wider adoption in multiple phases and spaces, and that will certainly drive the price and bring the valuation closer to larger than where it is right now. Right now, it's a very small space, as you mentioned, not too small, but at the same time, it has room to grow to catch up with other categories.
Mm-hmm. I feel like part of it is about the education of Bitcoin as a new asset class. So even traditional economists, they all wrote it off at the beginning because it's different and new. And when something comes in that's not already in the books, they have to change the equations. And I feel like there's a little bit of getting over on that side. But also on the production of Bitcoin, as you guys are focused on that, the mining of it, understanding the operational efficiency and also just the energy costs, and having a background in energy and renewable energies. I feel like there's a misconception right now around how much energy does it actually take to create Bitcoin, or how much energy does it use, or how much can it create. I'd love to get some of your insights into the energy side of Bitcoin mining.
Yeah, look, this is as you rightly mentioned, energy is an important component to mining, and the lower the cost, the better the outcome for our stockholders and our company. In terms of renewable energy, look, there's solar. If you think about solar and batteries, for example, because of so much investment in solar and wind, there's something called duck curve, which means that there's so much electricity being produced during a certain number of hours during the daytime, and then it dives down very, very quickly towards the end of the day as the sun sets or gets closer to the sunset. And so the intermittent nature of that solar and wind renewable energy, that some of that could be addressed by batteries, which is a store of electricity, but unfortunately the batteries are still very expensive despite the costs coming down over the years, and they drain very quickly. They can run between 2 to 4 hours, so it doesn't solve the 24-hour base load problem of energy demand. So where somebody like us or mining company comes into play, Bitcoin mining company comes into play, is that we can be that company that takes that power when there's excess production, where they don't know where to put that power for use, and then when they need to curtail or they need more energy during the evening times, we can curtail and we can stop. So it's like a switch on and off without impacting our operations. So it's like an energy arbitrage, which helps the communities locally not to rely on more expensive sources of energy and non-renewable sources of energy, and at the same time being able to utilize the existing infrastructure that exists. It's an amazing secret that not everyone knows, and as people get to know this quality of energy arbitrage, if you like, in this space, utilities and solar and wind providers, they will start tapping on technologies like Bitcoin mining, where this could be achieved.
Mm-hmm. Wow, that's very interesting, and hopefully I'm assuming the advancements in the efficiency of solar and renewables will hopefully only get better, if at all incrementally, at a little bit at a time. But understanding that point about Bitcoin, from what I understand, you're saying you can actually, it's sort of the opposite. People think it uses a lot of energy, but you're actually able to power communities with the Bitcoin excess energy and the energy that's produced. So sort of like subsidizing cheap energy costs from the production of Bitcoin.
Yeah, you can view it that way, because as the sun sets, at that point in time, you have to go back to the grid. And the grid is, the demand for the grid increases. People go home, they switch on their lights, electricity, it's prime time, switch on the TV, air conditioning is running, and the demand goes up at that point in time. And there's no solar at that time. So what that does is it provides us the opportunity for a solar provider or the grid to actually ask us to, hey, can you guys shut down during this period of time? We shut down during that period of time. But when there's excess power out there, we go out and consume that power, so helping out any excesses in the grid system. So it certainly helps in balancing the grid. But I want to point out to one more thing, since we were talking about actually the costs of mining and our energy costs. Look, we believe in zero cost energy. So Marathon wants to focus on our costs to be close to zero. How do we achieve that? And there are multiple ways of doing that. And that is entering into attractive PPAs with renewable energy companies, and helping providing that arbitrage that we just talked about a few moments ago. We also are looking into other technologies for example, energy capture. I'm sorry, excuse me for that. This is the heat capture. And what that does is the machines produce heat, and if you can capture that heat to produce something else, then it creates value reduces your costs as a result of that, right? Generates more revenues. So, for example, we are piloting a program that will farm shrimp. So we're farming shrimps, and that is using purely heat captured from our machines. So that's a pretty attractive way of reducing our costs and increasing our revenues, and creating solutions to the problem out there in the marketplace. We also have other opportunities like methane capture, for example, using the trash to convert into value. There's a lot of trash in this country and across the globe. And converting that trash into energy is something which is very valuable. And that can be done because of our modular approach of Bitcoin mining, because we have those modules, containers that we can plug and play anywhere. You don't have to have expensive buildings and construction materials to install something. We can just ship the machines, ship the container, and plug it in and get it running very quickly. And that provides us that opportunity to go out and target these landfill sites that are remote, that are away from any interconnection or civilization. And usually they are out of civilization because nobody wants trash in your backyard. So that helps generate clean baseload electricity, reduce methane emissions, which is significantly more harmful than carbon emissions. So certainly there are lots of low-hanging fruits out there that our teams have been working very diligently and thoughtfully, and more to expect on that.
Wow, very interesting, Salman, and especially about the Bitcoin-powered shrimp. I think I might pay a premium for shrimp that was grown with Bitcoin power. That's actually super cool. And thanks for all these insights into the renewable side of it. I'm curious, within the US and the Biden administration, they've been talking a lot about renewable energies and moving away from fossil fuels and trying to get more renewable energy sources. Do you see this having a positive or negative impact on Bitcoin, or is it sort of more neutral as Bitcoin shifts to just trying to use different renewable energy sources?
I think, look, renewable energy focus and push towards that. Some states, and it's all over the place. If you look at the map, some of the states like California, Texas, they have exceeded the expectations on renewables. Their grids have been impacted, so the pipeline of work has been humongous in that direction. Whereas there are certain other states who are lagging behind. But in terms of benefiting from Bitcoin perspective, look, consuming renewable energy certainly is helpful for the environment, and also reduces our costs, and certainly is a welcome move from our perspective. We certainly evaluate those opportunities as they arise, and certainly we have our ears open towards any kind of renewable energy related legislation that will help us drive more value for our stockholders, and certainly more investment in that area will drive more value for us for the reasons that I mentioned earlier.
And moving forward into 2024, there's one at least for sure, maybe two very important events. The first one, obviously, with regards to Bitcoin mining, is the Bitcoin halving event, where the supply of new Bitcoin gets cut in half. And the second potential probable event is the Bitcoin ETF approval, maybe sometime in January, maybe sometime in March, maybe it won't happen. But those are two significant events that I see coming up. And I know at least one of them is very specific to what Marathon Digital Holdings is working on. Can you talk about those events and how you and your team would prepare for at least the Bitcoin halving coming up next year?
Yeah, Ashton, the halving happens every 4 years, as you said, and what that means for your listeners, it reduces the coins earned or per block, half of what you used to earn just yesterday. So that happens every 4 years. What that means is that you need to become more efficient, and more efficient means you need to have more efficient machines. For example, the last time around, having the efficiencies of the machines was, as measured in joules per terahash, it was close to 90. I think it was 88 to 90 or so joules per terahash, and now it's expected to be in the 30s, low 30s or so, and so the improvement has happened over this period of time. Technology has improved from an efficiency standpoint. On the other hand, the cost has to be better than what it was previously, and that's where the zero cost strategy that Marathon is focused on, investing in ancillary but related businesses to Bitcoin mining certainly helps us drive that value and reduce our cost. In terms of preparation for halving, look, this is business as usual for us. We are a public company. We have a great management team, and we focus on these events. These events can be planned ahead, and we protect ourselves for the worst, but also plan for the best. Somebody told me the other day, hope is never a good strategy. Our hope would be that the price doubles and does the way it has done in the past. But the reality, the data shows us that Bitcoin price is not much correlated to halving, and it's more correlated to macroeconomic conditions. And the last few halvings, the macroeconomic conditions were very different. There was M2, global M2. There was a lot of inflow of capital. This time around, it's looking very different from that time. So there's skepticism around how that will play into the future in the near term pricing, and for that we have to be prepared for the near time, and that's why we have reduced our debt. We have almost $500 million worth of Bitcoin and cash on the balance sheet. It puts us in a very strong and unique position amongst our peers and the rest of the industry. And look, there will be companies who will bleed during this period of time. There are companies who are bleeding as of now, even with the price that was at $25,000 range. There are companies who are bleeding money at that time. So the question is, how long can they bleed, and is that sustainable or not? Will there be more consolidation that may happen at that point in time, especially the smaller players, especially the folks who have inefficient machines? So certain things may become attractive at that time. So that would be an opportunity for a company like us, who have a strong balance sheet to protect our interests and at the same time position ourselves for a very long success.
Wow. Yeah, there's a lot of factors going into it, and I'm excited to see how it all plays out with the Bitcoin price and the macroeconomic environment, and how much the Bitcoin halving event actually does play into the price, or what the price of Bitcoin will be just after that. So it's very exciting. And Salman, what is the best way for viewers to learn more about the mining operations and what Marathon is working on, and just follow along leading up to at least that event?
Yeah, visit our website, mara.com, MARA.com. We have some interesting statistics around our operations and our production by location and what we do. And we certainly are very invested in Bitcoin mining. That has been our sole focus. And we believe that bringing success to Bitcoin is going to be primary for our company.
Well, thank you so much for taking the time, Salman. All the best with Marathon and everything moving forward, and high hopes for Bitcoin moving forward as well. And let's definitely follow up in the near future.
Thank you, Ashton. Great to be here.